Happy Friday, everybody. Welcome to my Financial Friday live broadcast. Super excited to come to you with new information to update you on things like your personal finances, mortgage loan options, and ways that I can help you build wealth through real estate. All right, let's roll. So today we're going to continue our Financial Friday series. Super excited with this topic. It's something I'm very passionate about. It's market specific. So there's times when this is a super popular loan. There's times when it's not. We're kind of heading into a market where I think we're going to find more and more need to look at being creative in how to put together loans. And that is, we're going to talk today about renovation loans and everything you need to know about a renovation loan. Now, why do I say that the market we're heading into, it's right now June of 2022, and the market that we're heading into is a market where we have fewer buyers, especially fewer cash buyers. And so properties that have challenges physically, whether it be repairs that need to be done, whether it just be an outdated property, for the last 2 years, those properties sold to cash buyers quickly. And so all you had to do was price it correctly, and you probably got bid up pretty significantly because you had so many people looking for those homes. And so it put us in a position where there wasn't much of a value. There wasn't much of a need for renovation loans because they just price them well and a cash buyer would buy it. Well, we're shifting now. The cash buyers are sitting on the side. The stock market is lagging right now. Cryptocurrency is having major problems, and cash buyers are saying, you know what? I'm not really sure what I want to do with my cash right now. I'm not sure if I want to throw it into real estate today. And you've got sellers that are concerned about, hey, I want to sell my house and I don't want to have to put money into it to fix it up, but I want to get top dollar for my home because, well, that's what I've expected over the last couple of years. So we're dealing with some challenges on options to help people sell a home that has problems with the home. And that's really what I want to focus on today is how do we handle that? And what is a renovation loan and how do we make this happen for you, the buyer, for if you're a realtor, for your buyers? How does a renovation loan work? We're going to dive into a lot of details. I'm going to start with high level, some stories about renovation financing and things that I've done in the past that have really been creative, been a little bit different than what you might have expected. And then we're going to cover the details of it. So let's go ahead and dive in. So the first thing I want to talk about is what is a renovation loan? So what is a renovation loan? A renovation loan is typically for an owner occupant. There are some programs that can be used for investors, but typically for an owner occupant, a renovation loan allows you to fix up the home and finance the cost of repairing the home. So you don't have to worry about, hey, how am I going to come up with my down payment and come up with my closing costs and come up with the money to fix the property? And that's where a renovation loan lets you borrow oftentimes more than what the purchase price of the home is. And it's critical to be able to do that because for a lot of people, they just don't have the extra cash. They don't have the money to come out of pocket to do this work. And so we're able to finance it into the purchase price. And the work just needs to be done within the first 6 months after closing escrow. So one of the things I get a question about a lot is, John, what's the difference between a renovation loan and a construction loan? That's really critical. This renovation loans are relatively easy to get compared with construction loans. A construction loan is when you're buying a piece of bare land and you're building on it from ground up, or you own a piece of bare land and you're building on it from the ground up. The key being the certificate of occupancy. That's what the county or the city or the local municipality issues that says, hey, this property is ready to occupy. It's met all of the rules. It's been built just fine. And a renovation loan can be done on any home that has had a certificate of occupancy for at least 1 year. So if the property was constructed less than a year ago, we can't do a renovation loan on it. If the property was constructed, hasn't ever had a certificate of occupancy, we can't do a renovation loan on it. You have to get a construction loan. Construction loans are a greater risk. A renovation loan, if you run into challenges as you're fixing it up, we still have a complete home that just has some problems with it. But on a construction loan, a lender is stuck with a home that might be 1/4% built that nobody can move into and that they need another few $100,000 in 6 months of time to make it habitable. And that's a much harder home to sell if the original borrower got in trouble. A renovation loan, that's an easier home for the bank to sell. So therefore, we're not as concerned about lending money for renovation. We're way more concerned as an industry lending money for new construction. So they're two totally different products. You can only do new construction when you are having a certificate of occupancy completed and that it has been completed over 12 months ago. So I want to talk about a couple of case studies. So first of all, the first case study I want to talk about, this is a client I helped buy a home who it was an old home, like super, super old, 1920s, and everything was original. Maybe it probably did get actually upgraded in the 1960s, but come on now, a house in the 1960s is pretty much as bad as a house in the 1920s. And that home was a great deal. It was about $100,000 less than what other homes its size were selling for. Well, the reason why is because it required a bunch of work to be done. And we were able to literally gut the house down to the studs and start over. And they built the most phenomenal home. And the cool thing is a renovation loan let them expand. It was the perfect neighborhood they wanted to be in. It just was too small for them and it was super old. So this renovation loan allowed us to literally rip it down to the studs. Now you can't shrink the foundation, but you can increase it. You can build a second floor if you want to. And so this client was able over a 6-month time frame to be able to do the work and convert it into the house that they wanted in the neighborhood that they wanted. Now, one of the things that I'm finding is that over the last 2 years, contractors have been crazy, crazy busy. Rates were super low. Everybody was remodeling their home. Money was really easy and contractors were too busy to take on extra work that had such a tight timeline. Renovation loans are super tight on their timeline because we have to start work within the first 30 days. We can't, you have to, if you have any downtime or delays in work getting done, a delay can't be more than 30 days long. And you have to finish the work within 6 months. Well, there's a lot of contractors that just couldn't do that. I bought a house last year. I've been in this house for a little bit over a year and I'm still getting some work done. The contractor I hired a year ago is still trying to get some of the work done that we put together last year. So having an environment where contractors are not as busy as they have been is going to be a blessing because we find that construction is starting to slow down. I'm talking to some contractors who are not as busy as they used to be, which again puts us in a perfect environment to be able to do a construction loan. Let me give you a second case study, a second example I had. This was 2011, March of 2011. So we're talking about 11 years ago. And I helped a client buy a home in Tracy. And the problem is the home in Tracy, the seller had just put on a new roof about 3 months before. Now you'd think that's a good thing the seller put on a new roof. In this case, it was really bad because the new roof was too heavy of material. The seller thought, hey, I'm getting the best roof out there. The contractor, unfortunately, whether he just didn't understand or kind of was unscrupulous and decided that, hey, I can sell him an upgraded roof, even though the roof is too heavy for the frame of the home. And so what happened is you actually had a smiling roof. It looked like this because the frame was sagging. Instead of being the way that it's supposed to be like that, it looked like this because the roof itself was too heavy and it created a structural problem. So my client got a great deal in buying this house, but he now needed to put a brand new roof on. We literally had to tear off the brand new roof that was there and put another new roof on. We were able to do that. He basically, this is again 2011, he picked up the house for probably $180,000 and spent $30,000 on a new roof, but he only needed to put 3.5% down on the total acquisition price. Let me explain to you what total acquisition means. It means if you buy a home for a certain price and you spend a certain amount in upgrades, the total of that is your total acquisition. Now, in today's world, that might mean you buy a $400,000 home that needs $100,000 in upgrades. So that's a $500,000 total acquisition price. I'm only going to require you to put 3.5% down on the $500,000. That's $17,500 you're putting as a down payment. I'm loaning you $483,000 to buy a $400,000 home, because I know that after the work is done, the house is going to be worth somewhere close to the $500,000 number. Now, this brings up a different point. With renovation, you don't get dollar for dollar what you paid into the home. So if you buy a house for $400,000 and you put $100,000 worth of work in there, it doesn't mean the house is going to be worth $500,000. Some upgrades that you do increase the value equal to what you paid. Some upgrades you do increase the value even greater than what you paid for it. That's rare. But a lot of upgrades that you do only increase the marketability, livability, comfort of your home. It doesn't make it more valuable. Think about things like the roof. If there's a brand new roof or a 5-year-old roof, do you really care when you're buying a home? Not really. So somebody who took a 5-year-old roof and upgraded it to a brand new roof doesn't get any greater value, doesn't get any greater benefits to the fact that you are any greater benefit to the fact that you put a brand new roof on there. I'm not going to pay extra for the house that has that brand new roof. You need to understand that some upgrades are not going to give you actual increase in value. So just be aware of that fact. In this case, the roof being too heavy, technically the new roof didn't make it more valuable, but the fact that the old roof was a problem made the purchase price significantly below market. So that's where this client got a really good deal on it. My third case study is paint, carpet, and appliances. So let me be clear here. This is one of the most common things we use a renovation loan for. We often will purchase a home. I've purchased homes before that the property is not everything I wanted. It's super hard to find the perfect home in the perfect neighborhood in the perfect condition. So this allowed my client, and I've done this actually multiple times, to buy the perfect home in the perfect neighborhood without necessarily being the perfect condition. And that's critical because they're thinking ahead and saying, I'm okay if the floors are old. I'm okay if the house paint is ugly or peeling or anything like that, because we can fix that. I'm even okay if all of the appliances are old. And I'll give you a tip here. You can do as little as a few $1,000s of appliance upgrades, and we can finance that into your loan. Now, we cannot combine this with down payment assistance. But if you're already paying your own down payment and your own closing costs, or you have the seller crediting you for closing costs, you can do a renovation loan simply to replace the kitchen appliances, to put new carpet, and to paint. We're not talking about a lot of money, but we're talking about making the house right for you when you move in. And currently, the interest rates are exactly the same when you're doing a renovation loan versus a traditional FHA loan. So you're not paying anything extra in interest or in loan fee. I take that back. There's a little bit of extra loan fees on renovation loans, but it's a negligible amount, and it's well worth it because you can take that home that was almost perfect and make it perfect as you're moving in. And the cool thing is, if you're literally simply doing appliances, you can go to the local hardware, you can go to Lowe's or Home Depot, you can order the appliances through Lowe's or Home Depot, hand me the invoice for it, and when we close escrow, we can write a check to pay Lowe's or Home Depot directly. Think about that. You can get a house with your washer and dryer, your refrigerator, your stove, your microwave oven, all upgraded to brand new appliances, and you include those in your loan amount. It gives you a significantly greater opportunity to look at homes that may or may not be 100% perfect, but you can make them most of the way there by using a renovation loan. Huge opportunities here to use this program to help you to get exactly what you need in the home. So let's dive in and let's talk about the types of renovation loans. First of all, big picture. When I talk about types of renovation loans, there are currently two major types. There's conventional renovation loans and there's FHA renovation loans. Conventional renovation loans are hard to come by right now. The market, the way that it is, they really almost completely, all renovation loans almost completely disappeared in early 2020 when COVID created major turmoil in the economy. The FHA renovation loans have come back. The conventional loans are few and far between. The benefit of a conventional renovation loan is that you can do it with an investment property purchase. The challenge is the way the economic market is right now and the way interest rates are right now, it isn't really a viable product for the conventional renovation. So I'm going to spend most of my time today talking about the FHA renovation loan, because FHA, it is a viable product right now. And FHA is the mandate, the stipulation is it has to be your primary home. You can't do an FHA renovation loan on an investment property, on a second home. It can only be on your primary home. So there are some caveats that we need to pay attention to, but it is something that I think is workable in most situations, especially when you're looking at obviously buying your primary residence. So FHA calls their renovation product the 203K. 203K basically is it's the section of FHA's handbook, section 203K. And that kind of like civil code and all that stuff. So FHA's handbook talks about a 203K loan. And what you have is two types. You have a streamline and you have a full. Now, let me explain to you the basic difference between these two. A streamlined renovation loan is from zero, like there's no minimum amount of renovation work, up to $35,000 of renovation work. So a streamline is for things that, as it implies streamline, are easy to do and don't require a lot of oversight. So it's things that are non-structural. Now, most of the time, a roof is non-structural. In the case of the example I gave earlier, it was superstructural because that roof was creating sagging and structural issues on the home. We had to do what's called the full or standard 203K. But the streamline is the easier version. You're essentially picking your own contractor. You are getting the bid from the contractor to do the work, and then I am writing a check for half of the work up front, and then when the contractor finishes, the other half of the money is paid for then. So there's some challenges here we'll talk about later as far as finding a contractor that's willing to accept half the money up front and not get anything else until the work is done. But the benefit is it's a streamlined process, and you don't have to hire a HUD consultant if you don't want to. I'll talk in a few minutes about what a HUD consultant is. So you're from $0. So if you want to buy just $1,000 worth of appliances, we can throw that into your loan, no problem, by using the streamlined loan. Or you go with, and it's up to $35,000. And then the second option is what's called a full renovation or full 203K. That one is for bigger projects. The full 203K is for someone who says, hey, John, I want to do some structural changes. I want to move a load-bearing wall. I want to add a second story. I want to build onto the back of the house and add another bedroom and a bathroom. That's structural. You have to have, you have to do the full. Now, the cool thing about the full renovation loan is there's really no limit. Now, there are some caps. You can't buy a $400,000 home and put $800,000 worth of work. First of all, FHA has a cap on how much they'll loan in each county. So maybe let me give you a different example. You can't buy a $200,000 home and do $250,000 worth of work. I am fuzzy on the number. I'm pretty sure it's no more than 50% of the purchase price can be spent in cost of renovation. But rarely are you going to buy a $300,000 home and put $150,000 into it. It actually might be no more than 100% of the purchase price. Either way, there is a cap, there is a high end, but it has to do with a ratio of the purchase price. Aside from that, you can do almost anything you want. The key is you have a minimum of $5,000 of work and you have to hire a HUD consultant. And I'll explain to you in a couple minutes what a HUD consultant is. So let's go ahead and move forward a little bit here. And I'll go through, oops, it is not moving to the next slide. Anna, can you help me move this to the next slide? While you're doing that, Nancy says tiling a bathroom would need a 203K. Okay, so let's go ahead and take a look at Nancy's question here. So Nancy, if you want to pay included in the loan for the renovation work to be done to tile a bathroom, the only way I can include that in the loan amount is if you're doing a 203K. But you can do it as a streamline. You can do it as the easy version so that you don't have to have a HUD consultant involved. You're literally just tiling the bathroom. But here's where this comes into play pretty often. What if the bathroom in a house that is perfect for your client, the problem is that that bathroom has no tile at all. It's not about it being ugly tile. It's about it having no tile. In that scenario, this is perfect because you cannot buy that home using FHA because it doesn't meet FHA's minimum property standards. Now, that's what most people think about is, hey, we use a renovation loan when we have to because the property doesn't meet minimum standards. Well, in this case, Nancy, if your property didn't have tile or it was cracked tile and that was a health or safety tripping hazard, et cetera, we can use the 203K, the streamline 203K, to pay the cost of that contractor to come in and do the tile work. But you also, what most people don't understand is you can also do that if you just want to upgrade the tile. So let's say that it has good tile, there's no problem with the tile that's in the property, but you want it better. You want to upgrade it from tile counters to granite counters. You want to do something different. It's okay. You can take a perfectly working bathroom and remodel it. It doesn't have to be a problem with FHA. You can upgrade anything you want on the home. And yes, if you want to finance it into the loan, you would need to do a 203K. All right, so let's go ahead and get back to my PowerPoint because I can talk through kind of the options for you here. All right, let's pull that up. Here we go. All right, so let's talk about what repairs we can do. So let's make this a little bit bigger because I know this is pretty small. So I'm going to hide myself off of this screen here and make it a little bigger. Here we go. Okay, so what repairs can I do with the full 203K? Pretty much anything, okay? Changing the foundation, excavating, changing the size or location of doors and windows, etc. What you have to worry about is you have to worry about external work. You know, there's some caveats to landscaping, patios, decks, etc. There's issues with converting a project from maybe a duplex to a single family or from a single family to a duplex. So just be aware there are issues with how we do a renovation loan and what we would allow. What the most important thing I want to pay attention to is the next slide that talks about what you cannot do on a 203K loan. So let's see, I'm having a little bit of technical difficulty getting to that next slide. Hold on one quick second here. What I'll tell you right now, I know what the next slide says. So what I'll tell you right now is that a renovation loan on a full 203K, you cannot do luxury items. So you can't put in a swimming pool. You can fix the pool, but you can't install a swimming pool. You can't do significant landscaping and changing of landscaping. It's focused on the primary home. You also can't do the renovation on an outbuilding. What you can do is you can do, if there's required repairs in an outbuilding, a shed, that kind of thing, we can use the renovation loan for that, but we cannot use it for what do you want to call it? We cannot use it for, sorry guys, this slide issue is getting me a little bit off my game. Anyway, we cannot use it for luxury items. Swimming pool is a good example. You can't build a pool, but you can fix a pool. I think it's about $2,000 cap on how much you can put towards pool repairs, and you can use this to fix a pool. All right, give me one moment because I am going to try and open up this slideshow in a different way. The good news is I've been doing these for 3 months, and this is the first time that I've had a pretty major issue with my slides, but I will get this done right now. So the worst case is I'll read it to you and share it on my screen. Anyway, all right, so let me pull this up. The streamline. So we're going to talk, the next slide that's going to talk about is the things you can do on a streamline. It's cosmetic things. So up to $35,000 cosmetic items, flooring, paint, anything inside the house. Again, you've got the same challenge that you can't do landscape, you can't do that kind of stuff, but you cannot do anything structural in nature. So if you've got a wall that needs to be moved, if it's a load-bearing wall, as a matter of fact, you can't, let me rephrase that. Even if you know it's not a load-bearing wall, I don't know it's not a load-bearing wall. So you're going to require us to, we're going to be required to do a full 203K. And the key difference is we're including a HUD consultant. So what's the HUD consultant? Anna, did we make this work? Do we have the full presentation again? Let's see what we got here. I think we do. This is a little bit of a streamlined version of this. All right, so full 203K, I talked about we cannot do recreational items, swimming pool, barbecue pits, that kind of thing. Let's go ahead and go on to the next one. For a streamline, again, you can do just about anything as well. It just cannot be structural in nature and it cannot exceed the $35,000 cap. Now that $35,000 cap also includes the contingency reserve that I'll explain in a couple of minutes. But the bottom line is you can do a lot of work. You can do septic, you can finish a basement and remodel it. You can do a lot of different things with a streamlined 203K. Very, very flexible. What you cannot do is major rehab. So if you're in a position where you're saying, hey, I want to do, relocating load-bearing walls, new construction, room additions, repairing of structural damage, like what I talked about with my roof issue, any of those things we cannot do with a streamlined 203K loan. All right, now let's talk about weatherization and upgrades. Weatherization and upgrades is a cool little add-on. So with the streamlined 203K, I can actually get $10,000 more of renovation work done. I can do up to $45,000 of renovation work as long as the first $35,000 covers everything that isn't weatherization. And then I can get up to $10,000 extra. Sometimes the cap is lower, sometimes it's $8,000. There's a lot of moving parts here, but I can get additional money borrowed for weatherization. John, what's weatherization? Weatherization is making your home essentially more energy efficient. So maybe that means that you're blowing in better insulation into the roof. Maybe that means you're upgrading windows and you're getting the windows that are going to be more energy efficient. That's going to create more value in your home, not just because of the home value itself, but it's going to save you money on your energy bill. And that's really the reason why we're able to do the weatherization on top. So just be aware that there's ways we can be creative. And we can add weatherization so that we can leverage more financing, even though we're doing the streamlined 203K. All right, so let's dive in here again, and let's take a look at the costs that can be included. Essentially, gang, we can include almost all of the costs of the renovation itself, including the materials, the labor, the architectural drawings, the cost of the permits. But on top of that, if you do a full 203K, we can finance up to 6 months of payments. John, why in the world would you finance up to 6 months of payments? Because depending upon how much work you're doing on the home, there's a really good chance you're not going to be able to move in. If you're gutting the walls and the flooring and tearing everything out, you can't live there, which means you got to pay to live somewhere else. But your loan has already started and there's monthly payments due. How do you afford to pay for two places, for the place you're renting and to pay for the home that's being renovated? We can include up to 6 months of payments. Remember, the work has to be done within 6 months. So we can pay the payments out of the cost of renovation. So you're borrowing more money to cover the cost of the renovation to include 6 months of payments. And every month, one of the draws, some of the money that's coming out of the renovation money, goes to pay your mortgage for you. So it gives you significant flexibility that you don't have to worry about making a payment when you're renting a home and your home is being renovated. So that is a really, really cool feature of what you can include in here. You can also include architectural and engineering fees as well. So that's very valuable and helpful. All right, so let's talk about a contingency reserve. You can look at this for a quick second and then I'm gonna hide it and I'm gonna let you see me and talk about it. What is a contingency reserve? It's that fund that covers the what if. So you think about this and you say, look, I'm about to embark on a $25,000 renovation of my home. And I've got the bids put together. The contractor has already said, this is how much it's going to cost me to do the work. And then you end up doing the work. And when they tear out the drywall, they find that, oh my gosh, there's a bigger problem. We didn't realize that we have to change the layout of the framing so that we can fit this door in here. And we got to put a new header in and all this kind of stuff. I say this from personal experience. And so that is a cost overrun. We do not want you to be in a position where there is unexpected costs and there's not money set aside to handle that. So between the underwriter, the appraiser, and if there's a HUD consultant, we're all coming together and saying, what's the contingency reserve? Typically, it's either 10% of your renovation cost. So in that case, if you're doing a $25,000 job, the minimum contingency reserve is $2,500. It could be 15 or even 20% of the cost. So you're borrowing extra money that goes towards the what if. So in a $25,000 job, you're looking at anywhere from $2,500 to $5,000 of extra money. Okay, John, what can I use that money for? Well, during the course of construction, it can only be used for required upgrades to continue within the scope of what the original build was. Once the work is done and everything is completed and there's no expectation of cost overruns, then you have a couple of choices. You can spend that money towards enhancing the scope of work. You say, you know what? I got an extra $3,000 here, and my contractor said that he can upgrade the bathrooms. He can get me brand new toilets in all of my bathrooms for $3,000. First of all, if you're spending $3,000 for all new toilets, you have the wrong contractor. But as an example, you could do that, no problem, because it's part of the allowable scope of work. Now, you can't take the $3,000 and say, hey, let's go ahead and buy some trees and plants to put in the backyard, because you're not allowed to do landscaping with a renovation loan. So just recognize your first option is once the work is done and you haven't needed to dip into the contingency, you can spend it on things that are within the scope of allowable work. The second option is you don't spend the money. Well, then what happens to the contingency depends on how you paid for the contingency. If you have two options on how to pay for it, you can either write a check for that and say, okay, hey, I'm only going to borrow the money we actually need to do the work. I'm going to write a check for the extra $5,000 contingency. If that was the case, then you can get the money back. But if you don't want to write a check for it, or you can't write a check for it, then the money that you put into the contingency reserve is added to your loan amount. You cannot get cash back out of your loan. I cannot allow you to get a check back on money that we loaned to you. So instead, we write a check towards your mortgage balance. So if your balance was $450,000 and you have a $5,000 contingency reserve that you didn't spend any of, then we would write a check against your mortgage. So then instead of it being 450, it's 445. So your money is not lost. You just can't get the money back in your hand unless you were the one that put the money into the renovation account in the first place. All right. So now that we're done talking about contingency reserves, let's dive in and talk about how much money does a buyer actually need to buy a home? Now, I started giving you an example of this earlier, but I'm going to get a little bit more detailed right now. So in this case, it's simply the purchase price plus the cost of renovation equals the total acquisition cost. So we loan you 96.5% of that total acquisition. Here's the cool thing that I'm going to explain again in a couple of times, but we are allowed to loan you up to 110% of the after improved value of the home. So really the buyer puts in 3.5% down. Now you're saying, but John, you just said you loan me 110%, so therefore I don't need any down payment. That's not what we're saying. What we're accounting for, or what we're accounting for here, is we're accounting for work that you do that does not make the home more valuable. So I'll give you really, really simple numbers on what I'm talking about here. If you buy a house for $400,000 that needs $100,000 worth of work, your total acquisition is $500,000. And that extra $100,000 worth of work, maybe it only added $50,000 to the value, because some of the work was just cosmetic stuff, or it was your preference to replace perfectly good countertops with a different color of perfectly good countertops. That is your prerogative. But guess what? A different color countertop does not make the house more valuable, unless the old countertops were super ugly. But the point is that if you said, okay, I'm borrowing, or my total acquisition is $500,000. That means my loan amount is $483,000. Am I allowed to loan you the $483,000? Remember, your down payment is $17,500 because we need $400 to buy the house, $100 to do the work. Total is $500. You're putting $17,500 down. I'm paying the other $483,000 as a loan. But the appraisal comes back and says, hey, even with this extra $100,000 worth of work, the house is only worth $450,000. We're okay, because 110% of the $450,000 is $495,000. I can't loan you more than $495,000, but I wasn't trying to. I was trying to loan you $483,000. So you can borrow $483,000 to do that work, even though the final value of the home after the improvements are done is only $450,000, because we didn't exceed that 10% tolerance. That's a super, super detailed look at it, but it's critical to understand that, because that's what a lot of people are afraid of when they embark on something like this, is that, hey, I'm not going to get dollar for dollar value out of it. It's not worth trying. The truth is you absolutely can do it, and it gives you flexibility as it shows right here, the after improved value, you're okay as long as you are less than 110% of the after improved value. All right, so what's a HUD consultant? The HUD consultant is basically a general contractor who's helping you to oversee the work that's being done. And I know there's a lot of words on here, but I'm going to ignore that for a second and just let you talk to me. The HUD consultant's job is to be your advocate. They're also my advocate. So the HUD consultant's job is to basically work as a third party to shepherd you through the entire process. Now, mind you, you have to have a HUD consultant on a full 203K. The HUD consultant's going to cost you between $1,000 and $2,000. So it's going to be an extra cost. Typically, half of that you got to pay the HUD consultant up front. The rest of it can be included in the loan amount. But the benefit is the HUD consultant is with you all the way through the end of construction. So when your contractor says, hey, I've finished this phase of work, I want my money. Instead of you going and taking a look and saying, oh, yeah, okay, I think you're done. I'm signing off on that. You're not going to have that problem. The HUD consultant is right there holding your hand there. When it's time to get money, the HUD consultant walks through and says, wait a second, that clock up there in the corner, that's a little crooked. You need to fix that. I'm not signing off on this phase until you fix that. So they are your eyes and ears. They are your advocate. They're also my eyes and ears, because we know the HUD consultant is not going to let a structural issue go by. So when you are moving a load-bearing wall, the HUD consultant's there to make sure that we're not going to be stuck with a house that ends up having foundation problems because you didn't shore it up properly when you remove the load-bearing wall. So HUD consultants are super valuable, whether you have to have it because you're exceeding 35,000 or you are in repair work and or you're doing structural work, or you're under 35,000, you're not doing structural work, but you choose to have a HUD consultant, is entirely up to you. It's just the Streamline gives you the option to not have one if you don't want the expense. I'm going to talk really quick about self-help. So I don't have a slide on self-help, so I'm going to get rid of the slides for a quick second. But when we talk about consultants, some people say, hey, John, I don't need a consultant. I can do it myself. Well, that brings up the question of, hey, John, I don't need a contractor. I can do it myself. What that's called is self-help. Okay. So self-help is allowed per FHA, but most lenders don't allow it. And here's why. Because you have to have the time to put into the work. Well, guess what? Let's say you are a general contractor and you're like, hey, I'm going to do my own work. That's great. But if you put the time into your own job, you're not going to charge yourself any money, which means how are you going to afford to pay the mortgage if you're doing free work for yourself? That's a problem. You got to have the talent. You say, hey, I'm not a general contractor, but how hard can it be? I can do it myself. No, you got to make sure you have the time and the talent and the assets, because we're not going, if you did self-help, we're not going to pay for the labor. So if you have to hire labor, you got to pay for it out of your pocket. The only thing we're going to pay for is the materials. We're also not going to pay for the tools. So it's really time, talent, and tools. The tools, because you say, you know what, I'm going to do all the work myself, but the money I save by not paying the contractor, I want to use to buy the tools I need to do the work. Not going to happen, because the tools are not part of the value of the home. And we're not going to loan you money to go buy a whole bunch of tools. So you have to have all the tools yourself to get it done. If you have the time, the talent, and the tools, the truth is you got to find a lender willing to do it. I don't know of any. Currently, I do not allow for self-help. So if you're a general contractor, you still have to hire somebody that is not related to you to be the general contractor on your project. All right, so I want to make sure I covered that. Let's dive back in here to the overview of the process. So this is where it becomes critical that everybody's on the same page. If you're purchasing a home, by the way, this can be done as a refinance as well. So if you currently own a home, you can use this to refinance your property. A couple of differences here on a couple of steps, but everything I'm talking about overall is applicable whether you're refinancing or purchasing. But let's talk about the process. First of all, the purchase contract gets accepted. After the purchase contract gets accepted, you have to recognize we have a limited amount of time to actually get this project to closing. And we have a lot of work to do in the meantime. And it's the biggest challenge with doing renovation loans. They take between 30 and 45 days of an escrow. And the number one time constraint is the buyer figuring out what work they want to do on the home and then getting a detailed bid from the contractor. So first thing you do, you get your contract accepted. You got to determine your scope of work. What do I want to do with this thing? It needs work. I know I'm going to do a renovation loan. What work am I going to do on it? So you're going to have to figure that out, and you're going to have to figure it out quickly. Then you've got to pick a contractor, get the contractor in to give you a detailed bid. If you're doing a full 203K, or you want to use a HUD consultant, you bring the HUD consultant in at that time. The HUD consultant does a very detailed work write-up. It makes it easier on the contractor if you use a HUD consultant. Otherwise, I'm going to drive your contractor crazy because I'm going to ask your contractor to be super clear on what work is being done where. Most contractors write a pretty vague bid and they say, hey, we're going to install 3 ceiling fans in the house and we're going to replace 14 canned lights and we're going to upgrade the electrical in one of the bedrooms. Well, that's great. I've got to know which rooms you're putting the 3 ceiling fans, because what if 2 of the rooms have broken light fixtures? Well, in the contractor's mind, it's like, well, yeah, that's being replaced by the new ceiling fans. But we don't know that, because our worry is when you're done, we're going to have 3 rooms that have new ceiling fans and 1 room that still has broken light fixtures. We've got to know room by room in detail what's being done in every single room. Very rarely does a contractor get that specific. So we are going to drive them crazy. If you use a HUD consultant, your contractor just needs to talk to the HUD consultant, and the HUD consultant will walk through room by room. He'll break it out room by room and make the process a lot easier for you and for everybody. So that's a pitch for why you should use a HUD consultant. Once you have the final bid or work write-up, that is when we are going to do the appraisal on the property. Okay, so you send the bid to the appraiser. We send the bid to the appraiser because the appraiser cannot appraise the after improved value until the appraiser knows the improvements. It's actually really frustrating because people are like, hey, we got a timeline. We got to get the appraisal done in the first 17 days. Okay, well, first of all, it's going to be harder for the appraiser to do this job than any of the other jobs that they're working on, because the appraiser can't just walk in and say, oh yeah, this house looks nice, everything looks good. He's got to walk in and say, oh wait, this house is gonna, well, it looks like this, but it's not gonna look like this. You're gonna do this in this room, and you're gonna do this in that room. And they have to really walk through line by line. And they say, hey, there's a problem over here. This window is cracked. That's a health and safety hazard. Is that on my report? Oh yeah, that window's being replaced. Good. Oh, wait, no, that window's not being replaced. Now I've got to require that, and we got to get the contractor to add that to the bid. It gets super detailed during that process. Once the appraiser goes through that, they may add requirements that say, hey, I want to get a certain extra work done because there's something that needs to be done with this property that isn't included in the bid. At that point, we are finally ready to submit the loan to underwriting. Now, here's our challenge. How long did that just take? If you're trying to close this in 21 days, the only way I can do it in 21 days is if you got all of that to me in the first 3 days. Because I still need the rest of the time to get the actual appraisal done and the loan underwritten. If you're able to do it in a reasonable amount of time, in the first 7 to 10 days, I can get a 30-day escrow closed. But sometimes it takes clients 2 to 3 weeks to get through the bid process. I still need 2 to 3 weeks to close escrow after I've got the bid and get the appraisal ordered. So just be really clear, that's the biggest challenge. At that point, the loan proceeds just like a regular FHA loan. And once the loan closes, the money that was being used as the purchase price goes to the seller. The money that was being used as escrow holdback, the money for the renovation, we hold on to that. We become the neutral third party that holds the money, that writes a check. If it is a streamlined renovation loan, the first draw and the only draw goes to your contractor immediately. It's for 50% of the scope of the work. What we're basically doing is paying them for materials with the assumption that half their cost is materials, half their cost is labor. So 50% is paid up front. And then when they get the work done and they show that the work is completed, they get a check for the other 50%, which is generally their cost of labor. So you've got to find a contractor that's willing to only get half the money up front and get nothing else until the job is done. The only exception to that is if you're doing appliances, we'll write a check for the entire amount of the appliances immediately. Okay, so that's how the draw process works on a streamline. Let's go ahead and dive back into my presentation here though, and let me explain to you in a little bit more detail about the draw process on a full 203K. So when you're doing a full 203K, it's up to the HUD consultant to decide how many draws he does. It's really negotiable with them, you, and the contractor. And the HUD consultant goes in and makes sure that the work is done correctly at every single phase. They're inspecting the work, and then they're doing a holdback of 10% of that phase's payment, and is not paid until the end when the final clearance is done. So your contractor is getting 90% of the money they need at each phase. The extra 10% is held as an insurance policy for you and for us that says, hey, Mr. Contractor, you need to come back and finish. There's a little bit of work left. Well, if their only payment left is a couple $1,000s, they might just move on to something else. But if you've withheld 10% of their money all the way along, they got a pretty good incentive to stick with you. And that's why we do it that way. All right. I know I'm covering a lot of detail, but really my purpose here is if you're in the middle or thinking about doing a renovation loan, you need all of these details. And so you'll thank me as you're going through all of this. And again, we're not going to be that much longer as we go through this. All right. So now I'm going to talk about tips and tricks. The first thing is the number one delay is the buyer's timeline to select the upgrades. I already talked about this a little bit, but guys, it is critical. You do not have time on a purchase transaction unless you get a super extended escrow. I need a minimum of 2 weeks, more like 3, from the time that I get the appraisal ordered to closing. Now, I can't order the appraisal until you have picked all of the upgrades you want to do. You have to pick who the contractor is going to be. They have to give us a very, very detailed write-up, or you're using a HUD consultant and they do the detailed work write-up for us. But if you're not sure, hey, maybe we're going to shop around a little bit and we're going to decide if we want to get granite or if we want to do quartz. Do we want to upgrade the countertops at all? You've got to decide quickly, and you cannot change your mind. I'll talk about changing your mind in a second, but the second issue, number 2 delay, is selecting of the contractor and picking the bids. So the first thing is you have to decide what your upgrades are going to be. Second thing is you have to decide who's my contractor and how quickly can that contractor get me a bid. Be careful, because a lot of us know contractors that are really good that are kind of a one-man show. That one-man show does not likely have the bandwidth to handle all the paperwork I need from him or her. Not only do we have to go back and forth with hey, I need you to correct this and show me which bedroom those ceiling fans are going into, but I've got to get copies of licenses, of liability insurance, of workers' comp. I got to get a lot of paperwork from them. They got to fill out forms for me. That one-man show, he's going to get tired of us pretty quickly and he's going to bail. So just be aware of that. You get to pick whatever contractor you want. We just validate the contractor. We make sure, is that contractor licensed? Does that contractor have the correct insurance that we need? Aside from that, we're not deciding if they're good at what they do. That's up to you. We're just making sure that they have the license, that they're legally insured and bonded and all the things that they need. So just make sure, my expectation is that within the first 10 days, we have your selection done, we know who the contractor is, and we get the bids from them. So it is critical that we get the bidding done in a short period of time. All right, so let's talk now about the next delay, and that is buyers changing their minds. Here's the problem. We basically start over from scratch. If you change your mind and you say, you know what, John, I've decided that instead of doing the quartz countertop, I'm gonna change it to tile. Don't worry, it's cheaper than what we were gonna do, so it won't be a big deal because you guys already approved me for $20,000 of renovation work, and this only makes it $15,000 worth of work. The problem is the appraiser was valuing the home, assuming that it had a quartz countertop. Now I've got to show the appraiser the changes and get the appraiser to go back out and say, well, what's the house worth now, given the fact that the work we thought was going to be done is in fact changing. So a huge delay is changing your mind. It's prohibitive. It creates major problems. You have to know going in, as you're writing the bid on the home, figure out the work you want to get done. Go there a couple extra times, take lots of pictures, videotape, whatever you've got to do. But you've got to decide quickly what you need and not change your mind, because it's big problems that it creates in us being able to close on time. All right, so now let's go on to the fourth major delay is vague contractor bids. I talked about this a little bit, but let me be really clear. The contractor has to break down very specifically. I had some work done in my backyard. at the house I was selling. And I had a contractor come out and he said, okay, well, we're going to do this, 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 and the other thing. And I said, okay, can you write that up on a bid for me? And he says, yeah, no problem. And he literally wrote, replace some rock, tear out some trees, insert some new trees, redo shrubs around part of the pool, cost X number of dollars. That was it. It was literally like 2 sentences where he wrote that. It was not what kind of material. It had nothing to do with, wait a second, are you going to put a base layer? Like, obviously this is landscaping, but are you going to put weed felt down? What are you going to do? Does this include the fees to dump the old shrubs that were there or not? Like, a lot of things come up that when the contractor's vague, we're not going to let them be vague. We've got to understand, did this bid include what the costs are to throw away the stuff that you're tearing out of the property? You got to tell me yes. If the answer is maybe or unknown, we're worried that they're going to have a cost overrun later and say, hey, by the way, you got a pile of stuff in your house because we never quoted you to actually remove the stuff we were taking down. It's just sitting there in your driveway. That's a major problem that can become prohibitive down the road. We won't let that happen, but it means for you, you're going to have to help me really push your contractor to give us a very, very detailed bid. All right. How many contractors you're using? This is a major problem. It is on a streamline, you're allowed to have up to 3. You basically can have 3 contractors that you use because you're saying, hey, John, I've got Home Depot is one of my contractors because I'm getting all my appliances from them. And then I'm doing a flooring guy that's going to replace all my flooring. And I'm getting a carpet guy. And he's going to, not carpet, painter. I'm going to get a painter. And the painter is going to do the painting work. Okay, that makes sense. Those are 3 unrelated jobs that you can kind of manage and say, hey, the first week the flooring guy is going to come in, and the second week the painting guy is going to come in. By the way, do it the other way. Paint first, then put the floor in. Okay, but the painting guy is going to come in the first week. The flooring guy is coming in the second week. Home Depot is going to come in and install the appliances the third week. That's pretty simple. But when you're getting more complicated, or you say, well, no, I got 5 or 6 people that I need to have come in, we won't allow it because that's too much coordination. And people are going to end up stepping on each other, and it's going to create problems for you, but but equally for us in making sure that a quality job is done in a timely manner. So really what you need to do is you need to hire a general contractor, and that's required on a full 203K. So you've got one general contractor. That general contractor is who we pay, and then the general contractor subcontracts out whatever work. Now, a lot of people say, John, I don't want to pay a general. I pay him a huge amount of extra money to run the job. And it's not that hard to run the job. It's really hard to run the job. Okay. My wife and I did a fair amount of work over the last year on our new house. And we've had issues getting different contractors in to do different things. And essentially we acted as our own general because we hired one guy to do the bathrooms, one guy to do the kitchen, one guy to paint, one guy to do the flooring. And now we had to coordinate who's coming in at different times and how much of the work they can get done. It is a nightmare. It cost us a lot of stress. So it is worth the extra money to pay for a general contractor. And in most cases, it's necessary. So ideally one contractor and they sub out the work. So how do we close in 30 days? This is kind of where I'm going to wrap with. You've got to be on your game. All the renovation specific items have to be completed in the first 10 days. You've got to determine the scope of work. You've got to pick your contractor. You've got to get the bid from the contractor and or the work write-up from the consultants. And then it gives us 20 more days to complete the transaction. The final thing I want to cover with you, I'll leave it open for any Q&A. If you're watching live, feel free to post any other questions. If you're watching recorded, thank you for watching and post questions below. I monitor my YouTube and social media channels, and I can get back to you later. But really, when should you consider it? A couple of times. First of all, when the property you're looking at has serious property condition issues, that's the have to situation. John, I have to do a renovation loan. I don't have a choice. This property is not financeable. We can finance a property in almost any condition. If it's literally burned down, you can rebuild it because it had a certificate of occupancy that was over a year ago. You can use a renovation loan to purchase a burned down, gutted property. You also can use it when the home that you're buying needs cosmetic updates. Like it's the right home in the right location, but just not the right condition. This is the perfect way to get all of your needs met without having to wait for that home that's also in the right condition. And then finally, if you're looking for a specific home in a specific neighborhood and it just doesn't exist, Everybody talks about real estate is location, location, location. And when you are looking for a specific location, but the homes are either too small or too old and nothing exists in that location, buy a home in the right location and change the home. Use a renovation loan to upgrade that home to make it what your dream is, versus saying, oh, well, I'm going to compromise and buy in a location that I don't like. You can't change the neighborhood later. You can't change the schools. You can't change the location, but you can buy a home in the right location. You can buy the wrong home in the right location, and it will allow you to be able to make it the right home in the right location. Guys, I know that this was a lot of detail in this one, but I promise you that if you're thinking about a renovation loan, you're going to appreciate it. If you weren't, well, then I'm glad you stuck with me for the entire hour. Anyway, I'm done. So if you have any questions, feel free to post those into comments. Make sure to join me next week. We're doing an amazing live broadcast next Friday. What is that going to be? The 24th. And we're going to be talking about wills, trusts, and estate planning. So join me. I'm going to have a special guest attorney. So you won't be hearing only from me, but I'll be interviewing her and talking about how to really plan your future to make sure that you're taking care of both yourself, but also your loved ones once you're gone. So thanks for joining me today. Hope you all have a wonderful weekend, and we'll talk to y'all soon. Bye-bye.